Hello, I'm Martin Smith and this is your UFX Markets Week in Review. Today we'll take a look at the biggest mover and shaker of the week, gold. Gold and even silver metals have been attracting worldwide interest to end this past week. Gold advanced to a record high of $1,917.90 an ounce on August 23rd, only to drop by 5.60% on the 24th as declining equities and the metal's biggest weekly fall in more than 3 months spurred investor demand before a speech by Federal Reserve Chairman Bernanke. Owing to the optimistic traders who were selling gold, the yellow metal finished the week down 2.96% in futures for August delivery and dropped by 1.34% versus the US dollar and was last seen trading at $1,826.83 per ounce. Gold futures declined by as much as 11% after gold's biggest record was seen on the 23rd. European equities fell and the US dollar weakened against most major currencies as traders held their breath, waiting for Bernanke's signal further steps to support the US economy. He's been quoted as saying that the central bank will keep borrowing costs near zero at least through mid-2013. Gold bullion is in its 11th year of a bull market, the longest winning streak since at least 1920 in London, as investors seek to move away from equities and a few currencies. Before this week, gold climbed for 7 weeks back-to-back, the longest run of record gains since April of 2007. The 5.6% drop on gold on the 24th was the biggest decline seen since March 2008. Reports on durable goods orders and home prices beat our estimates and equities climbed, prompting an increase in margins on futures contracts for a second time this August. The 10-day historical volatility for gold futures this week spiked to approximately 41%, the highest level since March 2009, according to data compiled by Bloomberg. An 18% increase in worldwide gold prices in the 2010-2011 year to a record around $1,500 an ounce encouraged miners to dig more mines in Australia. Studies show that Australian gold production lifted by 10% this year. The recent spike in gold prices has certainly drawn attention to the industry, but it's the sustained long-term upward trend in the gold price that has prompted companies to reevaluate older deposits, successfully redevelop them, and also explore even new ones. China is the #1 world's largest gold producer, Australia coming in second, mining 345 tons in the 2010. And we, of course, expect a higher yield from China in 2011. Here at UFX, we have found that the lower equities seem to be giving support for gold as a safe haven, and as prices rise, so does the scale of volatility. Investors have been on the lookout for a bargain after this week's drop. That tells us that despite the uptrend being firmly intact, you should expect aggressive corrections while moving along. Gold is well supported in the short term. Well, that's all we have time for today. I hope you've enjoyed this week's gold review and I hope you'll join us next week. Until then, be sure to visit us at ufxmarkets.com for all of your online trading needs. For UFX Markets, I'm Martin Smith. Good luck and happy trading.